Welcome to Markets Now. I'm Michelle Rook with Brad Kooima with Kooima Varilek. Well, the grain trade, higher in the row crops, lower in the wheat. Cattle set back with a mixed day in the hogs. Brad, let's talk about the cattle market first off. We had new highs for the move on Monday with the record cash trade pushing us, but we failed yesterday and today. So what do you think? Is that just some routine profit taking?
Well, I guess that's what I think. I hope so anyway. I was encouraged even on a little bit of a down day today that the forward spreads were working. The front months stronger than the back months. That's typically a decent sign when the bull spreads continue to work on a correction, and really not severe. We came off our lows a little bit. Feeder cattle maybe a little sloppier than I would have liked to see, but I think the challenge in a market like we had on Friday of what do you do for an encore kind of a thing? Do you expect cash is going to be 3 to 5 higher every day? Well, clearly that's not going to happen. So you'll have some people saying, you know what, I'm going to take that opportunity to take a little bit of money. Now it is a little bit of a wonky week here with no markets tomorrow, and then the report on Friday. I'm just kind of hoping that report goes by us without really saying much. I'd be fine with the neutral report, just so there isn't any funny surprises there. Hopefully the report reminds us that we do have a few less cattle on feed, and we'll see once if we a little bit of reality of just how tight the numbers are here across the north. I still think Nebraska, Iowa, South Dakota, that the expectation of what we have for sale and what we actually do have is vastly different.
Yeah. So we mentioned the record cash trade last week, 192.55 on the 5-area weighted average. Can we build on that this week?
Yeah, we could talk a long time about the imbalance between the prices of the South and the prices in the North. So you quoted the average price, but I know of cattle that were sold for $1.98 right here, and I think that there was a small regional that paid $200. So we maybe broken that magic barrier a little bit too. So then you compare that to the South, which basically was 186 with maybe a little bit of 188 late. I don't have records for this sort of thing, but if that's not the record spread between North and South, it has to be awfully close. I think, I don't know, I got a little saying stuck here up underneath my desk where no one else can see it. The beginning and the end of all markets start in Iowa. So your listeners in Kansas and Nebraska and wherever, Texas, are going to be offended by that. But what I mean by that, and I think it's true, we'll have a problem here in the farmer-fed area sometimes by not doing a good job of staying current. Feed our own corn, maybe feed a couple of pens a year, maybe fall in love with a pen of cattle if they're losing money and make them way too big. So usually that statement is said in, remorse of how the North is causing a problem. But I think it's 100% 180 opposite of that right now. Show lists here are so much smaller than normal for the middle of June. It's not even funny. And so we do negotiate here, right? Over half the cattle in Iowa get negotiated for. And I certainly think that that's part of the story, where you've got 90% of cattle in some areas in the South that are all formula cattle. Imagine that they don't get as much for them as when we're up here with this one magic word, leverage, where we're able to wait and make the packer come to us.
Yeah, and to your point, 96,000 head nationally negotiated last week. That's huge, isn't it?
Huge. Yeah, I've got about a 10-12 year study. Some people believe it, some people want to discount it because I'm not a PhD, but it's kind of just math. And that would be the more you negotiate, the higher the cash price is that week. And I think I could document that over and over and over. But there are others that feel differently, to each his own. But I thought that was super impressive and not coincidental on the sharply higher cash week.
No, not coincidental. And packers, as you said, are actually pulling cattle from the South to the North because we're so tight up in the North, right?
Also a great sign. Exporting cattle out of there up here to cover kill needs here. Freight is kind of that's the whole issue there for them. But there's another side issue, maybe to a degree, and that would be the grade. So choice select spreads wide enough again at $16, where the packer still is going to have to chase some grade. I think, particularly if he's got certain types of meat and certain quality levels of meat that he's got sold. They've got that same challenge. The packers got to have a terrible conundrum here. How does he manage his tight inventory against wanting to be a reliable supplier of meat, particularly this time of year, going into the bulk of that big demand season for the middle meats? Not that I feel a bit sorry for him, but I mean, this is a challenge for him. It's going to be interesting to see when we balance what these cattle weigh, which is a lot, with as we move forward into the summer. If we do finally get into some more numbers, like later on, maybe like in August, it'll be interesting to see how the market handles that.
We mentioned the cattle on feed report, but USDA is actually going to reinstate that July semi-annual cattle inventory report.
Great news. Yes, they are. I guess they had to have an appropriations committee meeting to make sure they can fund it. I can't even say that with a straight face the way they throw money around. I think it's important. It's about transparency, don't think for a second that the people on the other side of this transaction are have whole rooms full of research staff trying to figure out what the supply of cattle is going to be. So really, I think it's about transparency, and it comes at a particularly a crossroads time, if I can use that word, where we're going to get reminded again how small the cow herd is, right? We're going to get reminded how small the calf crop is. But we also might get a hint at, are we starting this rebuild phase or are we not? Are we ever going to start to hold some replacement heifers? Of course, I'm interested in that from a long-term, number nerds kind of a point of view. I don't think you're going to see a lot of retention yet, at least not from the subjective visiting that I've been doing with folks. Some place in some regions will, yes, but I don't believe it's widespread. So I'm really happy that they reinstated the report. It comes at kind of a critical, at least analytical time, I think, for the cattle thing.
Yeah, there was a lot of folks lobbying for that, for sure. Hog market ended mixed today. We saw the bear spread. So nearby contracts lower, deferreds higher. Was that just a function of the lower cash and cutouts again?
Lower cash did not help. Cutout breaking like that as quickly did not help. You also had a big fund roll come out of the July today. And maybe the July got a little carried away with, hoping that the China news at the end of the week last week was real and make a big difference. I guess I'd like to think that maybe the worst is over on this break. My goodness, I mean, $20 plus without even a look over its shoulder. We feel like actually, I don't know, the fundamentals don't seem like they work very well on hogs, as I've said 100 times. But it feels like this is when we're going into that time where isolene pigs were hard to source, and it feels like numbers get a little tighter. The old days when it got to be 90 degrees, it seemed like that would help the market a little bit. So we'll see. Maybe all signs fail in the case of a hog market. But to me, there's still some indications that maybe, hopefully, that worst is over, and maybe we can get a little bounce going here into the summertime.
Okay, yeah, let's hope the last week's contract lows will hold this support. And corn and soybeans, a bounce today, was that all technical in nature, or did the lower crop ratings push it?
I guess I'm going to say probably mostly technical in nature. We're basically at the bottom side of what's been the recent trading range on corn. I do have a little more enthusiasm for corn than beans, just because I think they've got better old crop fundamentals, Michelle. You continue to have, at least in my region, which is Northwest Iowa, a firming basis. Had good exports. The ethanol picture looks pretty bright. One would expect excellent demand from that sector. So, there seems to be an old crop corn story here that's supportive. But to your point on the crop ratings, I don't want to belabor this because I was there in 2019 and a lot of years before that. But, that the too wet story didn't work then until 16 months later when they reconciled that. So, I don't want to really talk a lot about the Western Corn Belt is wet. Okay. Some of that, my son farms, so he's got plenty of crop loss because it's too wet. It just rained 3 inches again over the weekend. So, there's going to be people that say, hey, these are not the kind of ideal conditions that give you the potential for record yields. Some say that parts of the Eastern Corn Belt are a little dry. Well, I haven't been there firsthand, but I also know that last year the ratings didn't look very good either at this time of the year, and they still magically raised a crop. So I guess on the 18th of June, you can't raise or lose a crop. I would hope that maybe we could get just a little more new crop pricing opportunities. I don't mean to sound like I'm wildly bullish. I'm not. I think 4.95 is going to be a stretch on December corn. I think $12 is a reach on November beans, and I absolutely feel like there's a better chance of 4.95 corn before we get to $12 beans. So it just doesn't feel like the bean thing's got any gas in its tank right now.
Yeah. Just a quick question on beans. The bull spreads we're working today. Do you think that's some old crop demand there, maybe from the crush side?
Finally, yes. But that spread has been a bugger. I can tell you firsthand. I'll show you my scar. It's really the last little while. It's the first time that thing's finally showed some life. So thanks for saying that. That is one reason maybe I should get out of my bear cave on this bean deal. If we can get a little support here, show a little better demand from the crush side of this thing, maybe we can get this bean thing to firm up a little bit. So yes, great point. That's the old crop, new crop, July, November bean spread made a dime today, and that's a pretty significant move.
Yeah, no doubt. All right. Thanks, Brad Kooima with Kooima Varilek. That is Markets Now.